11 July 2023, Tuesday, MAO with Kel once again. Now, Temasek posts worst earnings since 2016. Now, this is incredible because we all know that the stock market has been going up to all-time high. So what's happening, guys? What is happening? So I'll tell you more in detail very shortly. Now, the thing is this, at the same time, there's a report saying that the bears are reducing their bets in the market. Is this actually happening right now? I'll tell you more in detail. Let's go. All right, so disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. Now, one thing to note is that Temasek, the state investors, okay, has posted the worst return since 2016. Now, they posted a 5.07 decline in the first 1 year total shareholder returns in Singapore dollars. The net portfolio value came in at $382 billion in 2023 compared to the $403 billion in 2022. So it was confluence of multiple global events not seen in decades that raised cost of capital and weigh on capital flows. So basically, right, from the report that we have right now, right here, you can see from CNBC, is basically the market does someone feeling that the global economy is fragile, but any recession will be mild. So this is something that is good for people who are considered bullish in the market. But nonetheless, right, we are kind of concerned right now is that with the portfolio adjustment, right, we're not too sure what's happening. But the thing is this, he did mention that it has an impact of the pace of the energy transition in the face of the greater demand for energy security and resilience. So there's something that we are looking at actually at the same time. So let's hope that the market can do well. And of course, that will give better returns to the whole entire sovereign funds. All right, moving on. All right, so with that out of the picture, let's go into the US stock market. Now, the Dow up by 209 points, while the Nasdaq was down by only 8 points. Now, primary was because Microsoft, Apple, Nvidia, Google, Amazon, Tesla, right, all went down. All right, the one that basically went accounted it was basically Meta, and of course, there's a good reason for that. And of course, the main thing is that now Meta has surged because of 100 million subscribers have signed in. Okay, 100 million have signed up for the Threads platform. This is really amazing because remember that this is like similar like the Twitter, and of course that making Tesla CEO Elon Musk not very happy. All right, so let's take a look at the article that we have. Let's bring it in. Okay, from that, where we go, Microsoft Meta. Okay, here we go. All right, so this is really incredible. And of course, the thing is this, whether will this continue? Now, there is ongoing rumors saying that this could continue to even 200 million. So that is going to give Tesla, the Twitter, a fight right now. And of course, Microsoft cuts more jobs recently by slimming down its sales force, and the new layoff is about 10,000 jobs. So again, all these are coming everywhere. So to Microsoft, when they do that itself, it's good for the share. So that's why you can see share going up. But the thing is this, more important that Chinese real estate stocks rises as Beijing extend property support measures. Now, this afternoon, we saw the Hong Kong, China market was down initially. When the news came out itself, right, all the property prices all went up. Property stock prices all went up. So would this be the turnaround? Well, to me, I don't think so. To me, that this is just the beginning. As a matter of fact, right, I'm not very comfortable with the current situation right now for China, and I hope that I'm wrong, right? And of course, the record UK wages has added inflation fears. Now, we all know that now the US is having a very tight job labor front, and that means that there's a lot of room for hiking interest rates. And of course, for UK, they also realize that their wage growth is also doing that. Hence, therefore, to hike interest rate is going to be happening. So if both countries are all doing that, you can imagine, right, what will happen to the entire market. So to me, a global recession is still around the corner. But the thing is this, out of 15 strategists who predict where the S&P will go by end of 2023, let's take a look what they have to say. This is kind of interesting because you can see a split camp between the both of them. Here we go. All right, so what we have right now is that out of the 15 market strategies of the investment banks and assets, all right, they did it during July. They will expect to give their fair view. And of course, like you see, Tom Lee is definitely very bullish. He's looking at 4,800 closing for 2023. This one I remember. So just 4 out of 15 strategies expect the S&P to end up higher than the current level. That is something that, I wasn't expecting that. And of course, we all know that, right? Some of them are looking at 4,500 and so forth. So out of 4, I mean, the 11 actually more negative. All right, this is kind of very, very interesting. So of that, some of them are very cautious because of the narrow breadth of the stock market rally. And of course, we have this Bank of America, who is kind of bullish. She said that there'll be much higher movement to come. Looking at 4,003 on a flat ground. But of course, if the rest is out looking at it's a bit frothy right now, they feel that the pullback is kind of expected. So out of the 15 of them, 9 of them actually are more towards the bear side. Yeah, that's interesting. Because later on, I'll show you an article, it seems that right, they are looking at the bears actually reducing their bets. So I'm not too sure what's happening here. So UBS expect the S&P to end at 4,001. That's a 7% from where we are right now. And if you ask me, I do see number going back to 4,001, which I shared a few days ago because of recession. But I kind of believe that later on itself, the cheap prices were going to bring in the traders in. What do you think? Let me know in the comment box. All right. So this is the chart here from the S&P 500, all right? So I want to bring it to you back in 2020, something interesting happened. Now, the bear seemingly is unwinding equity bet. Large speculators cut short position in S&P at the fastest pace in 3 years. So you can see right now, right, they are cutting their short position. Not too sure, was this the reason? That's why in a June period, we saw a tight squeeze all the way. This is a weekly chart. So this is what happened back then. If you look at it, similar thing happened back in June 2020. And of course, after that, when it did that, the market actually pulled back a little bit. Then after that, we have a very strong rally for about a couple of weeks or months before a pullback later. So all I can say is this going to tell us that the market will go higher, or is it because that now the bears are getting out, that is where the real selling will be? Well, this is going to be interesting because at the moment now, the S&P valuation measure shows that the PE ratio is the forward PE is still at a pretty high level. In fact, it's basically near to the same level before the sudden pull down due to the COVID pandemic. Yeah. So to me, basically, I don't think it's cheap right now. We can still look for cheaper price. But if there's going to be any significant pullback, that will be a very favorable thing for all the bulls and all the long-term investors. So based on what I'm seeing right now, this is the S&P chart. You can see that my S&P chart showing that the boys are still buying, but there is still some selling pressure in the market. Now, do note of this, guys. There's something might be happening around 25th of July. Yes, 25th of July, we may see some movement because that is where my next KFC level. Usually when that happens, there will be a big wave of next movement. Yeah. So traders, watch out for the date 25th of July. Okay. All right. So last of all, apparently there are Standard Chartered says that, right, the Bitcoin will go to 50,000 by end of the year and top 100,000 by end of 2024. Now, I don't know about 2024 top 100,000, but I kind of believe that by 2024, the Bitcoin should go higher to maybe 50,000 because by 2024 itself, right, this is apparently a year for the fire and a fire element, and usually technologies and things like Bitcoin should be performing well. So from the chart view itself, right, I cannot see any good reason for buying. I said again yesterday, unless we see an outbreak to 32,000, then maybe we can see going back to the 48,000. But from where we are right now, we can see that it's quite frothy here. So I rather believe that 28,000 is much more higher chance, right? And of course, if the market can pull back down to this particular level, which is like 25,000, I think that maybe will be the real reason for buying. Because the last time we saw this, the market break the MA 200, that is where it broke out, and then it pulled back, it stopped there brilliantly, and then went up. So if a pullback down to this point here, probably we will see something like this in the later part of the year itself. All right, so let me know in the comment box and see whether you and me share the same view. All right, that will be all for today. Thank you so much. Like and subscribe and share with all your friends. Kel signing off. Bye-bye.